Thank you. Our final panel today will focus on virtual currency. The increased interest in virtual currency and other payments innovations has led to the rapid emergence of different types of currencies and payments mechanisms. The virtual currency panelists will provide an overview of virtual currency regulations in the emerging marketplace. And with us today are Brian Krohn, Chief Financial Officer of BitPay, Karsten Behrend, Chief Compliance Officer of Zappo, Megan Burton, Chief Executive Officer of Coinex, and Anne-Marie Tierney, Executive Vice President, Legal and General Counsel at Second Market. And as I've asked the other panels, if you could please limit your comments to 5 to 8 minutes, then we'll allow us some good dialogue. So, Mr. Krohn, please start.
Thank you, Commissioner Cotney, distinguished members of the task force and the state banking commissioners for the opportunity to speak with you today. My name is Brian Krohn. I am the CFO of BitPay. I appreciate all of your interest in the commercial and international trade uses of virtual currencies and for reaching out to the community to better understand opportunities and risks that virtual currencies present. BitPay was formed in May of 2011, so that has been operating for 3 years, which makes us pretty old in this space today. During this time, we've acquired over 30,000 merchants to accept Bitcoin with our service. Our merchants include small, medium, and large-sized businesses in every state who accept Bitcoin side by side with credit cards as a form of payment. At BitPay, our role in the Bitcoin ecosystem is very close to that of a traditional merchant acquirer in the credit card space. Our software helps merchants clear and settle transactions over the Bitcoin network. BitPay is not an exchange. BitPay is not a Bitcoin bank. And we do not have any consumer-facing services. Consumers have no risk of loss from our service. BitPay is committed to being a good corporate citizen. We employ a strict KYC policy to protect against money laundering. Our KYC policy follows the best practices of traditional merchant acquirers. We need to know who our merchants are and what they're selling. We only want the good actors on our platform. Bitcoin does have risks, as other forms of payment do. Criminals use cell phones, email, U.S. dollars, and banks. BitPay shares the task force policy goals to protect consumers from fraud and money launderers, keeping money launderers away from our business. We implement a risk-based approach for merchant acquisition as recommended by FinCEN, BSA, and the Patriot Act. This approach provides increased CIP and KYC due diligence as the merchant's daily sales volumes increase. All BitPay merchants must provide identification and contact information and are verified for the types of businesses they are engaged in and that the business is compliant under U.S. law. Personal interviews by BitPay are required at the highest tiers. We also conduct ongoing monitoring of merchants' transactions to ensure visibility into potential money laundering and CFT activities. In summary, BitPay's policies and procedures are guided by regulations that have served the financial community well, and we will continue to track and comply with all existing and future regulations and recommendations. Guidance from the IRS, the Treasury, the Department of Justice, and SEC have all established that those dealing with virtual currency must simply follow existing tax laws and anti-money laundering regulations. Bitcoin is still in its infancy. It's much like the internet of the 90s. If we look 5 or 10 years in the future, we're going to see many companies built on Bitcoin-related technologies. And we want those companies to be based in America, creating jobs in America, and building a revenue and tax base in America. I commend the task force for realizing the real and practical uses of virtual currencies and the potential future applications of the technology. And thank you again for the time to speak today.
Thank you, Mr. Krohn. Mr. Behrend?
Good morning, Chairman Cotney and distinguished members of the task force. I'm pleased to have the opportunity to speak with you today. My name is Karsten Behrend, and I'm Chief Compliance Officer of Zappo, a United States-based digital currency company that's developing a new standard for institutional-level security and user convenience. At Zappo, I help guide the company's operations while driving high ethical standards of compliance. I'm also proud to serve on the executive board of the Northern California chapter of the Association of Anti-Money Laundering Specialists, or ACAMS as it's more commonly known. I'm the co-chair of the AML Compliance Committee for Data, and I also serve in the Regulatory Affairs Committee for the Bitcoin Foundation. Additionally, I volunteer my time as an active board member for the BitGive Foundation, which is a charitable organization that leverages the utility of Bitcoin for worthy causes. The virtual currency financial services ecosystem is highly evolving rapidly. At Zappo, I'm part of the team that offers high-security Bitcoin storage, as well as an expanding suite of Bitcoin-related financial products. A team with 2 decades of experience in international financial services and transactional security has developed our proprietary storage product, the Zappo Vault. The Zappo Vault meets the storage needs of the most demanding global institutions, as well as the needs of individual users, and is fully insured. In short, the goal of Zappo and myself is to expand upon the existing infrastructure of Bitcoin and to provide the public the proper tools to harness its power. It is through this continued development of the underlying infrastructure that we will see the protocol continue to evolve and flourish. We're here today to discuss the consumer protection concerns around Bitcoin and other virtual currencies. In the very early days of Bitcoin, there were companies that did not have the proper preventative security measures in place, and due to this, they incurred losses on behalf of their institutions and their customers. More recently, there have been virtual currency companies that did not employ best practices in several facets of their operations. And unfortunately, as is evidenced in recent years, this is not a phenomenon that is unique to this emerging industry. A common qualm about virtual currency is the term decentralized, which can seem startling to people unfamiliar with the Bitcoin ecosystem. Bitcoin is a decentralized system and is unregulated in itself, but is fully regulated when it is used to provide established financial services. Virtual currency-based financial service providers are subject to many of the same rules as non-virtual currency service providers when they provide many of the same services. If we treat the regulatory environment of this technology differently from how we would treat other financial service providers, we'd be violating the regulatory principle of technological neutrality. Virtual currency-based financial service providers are subject to many of the same rules and as non-virtual currency service providers when they provide these very same services. Virtual currencies are unique in many other ways. A virtual currency such as Bitcoin holds out a number of powerful beneficial social and economic outcomes, including global financial inclusion, improved financial security, and enhanced financial control. I am motivated by these tangible benefits that Bitcoin has to offer, and it would be regrettable if the world were denied the many benefits of Bitcoin due to short-sighted reactions and the challenges that come with this new emerging technology. In short, we need to develop thoughtful, nimble, and sensible policies that protect the public without stifling innovation and economic growth. As you know, the system in the United States with regulatory bodies in each state has many benefits, but it also runs the risk of raising regulatory costs to the point that they are prohibitive and they send smaller, more innovative Bitcoin businesses overseas. That dynamic could defeat your consumer protection initiatives because virtual currency-based financial services might become dominated by non-U.S. companies in which U.S. regulators have limited ability to influence or control. Though most uses of virtual currency fit into existing regulatory boxes, there may be some areas where virtual currency's different properties would necessitate different treatment. When this appears to happen, it should be the subject of careful study and dialogue within the virtual currency and regulatory community. Agencies and government officials have achieved powerful results when they've drawn on the expertise the virtual currency community has to offer. This community includes the staff and volunteers of the Bitcoin Foundation, such as myself, who have regularly consulted with and provided testimony to both state and federal agencies. I'm here in that vein today, and I hope I can answer your questions about Bitcoin and virtual currency as a technology, about innovative solutions, such as those developed by Zappo and my fellow panelists, who have regularly, as well as emerging trends with the Bitcoin ecosystem. I hope that today's hearing will begin a conversation that leads to thoughtful, stable, and uniform regulations throughout the states and the nation. I'm pleased to have the chance to participate in that dialogue with you today. Thank you.
Thank you, Mr. Behrendt. Ms. Burton.
Thank you for the opportunity. My name's Megan Burton. I'm the founder and CEO of CoinX. CoinX is a currency exchange. We're the first regulated exchange in the U.S. serving cryptocurrencies. We're a secure and trusted marketplace, and we assist in the international trade and investment by enabling currency conversion across multiple digital currencies, as well as in and out of traditional fiat currencies. But a critical part of our business, our model at CoinX, is our dedication to compliance. We currently hold money transmitter license in over half the states and have applications pending in the other half. We believe that compliance with federal and state law will make our business stronger, and it will help us serve our customers better. I personally have spent 16 years in the IT security servicing Fortune 1000 companies. In the security space, specifically around GLB and PCI compliance. In the spring of 2012, I read an article about a security breach that had intrigued me. But hidden within the text of that article was a relatively unknown cryptocurrency that had yet to make the headlines. My curiosity led me into venturing into a global transaction. And it was at this moment that I realized that the status quo of remittance and payments as we know it today would never be the same. No longer did I have to wait through the traditional banking payment timeframes to send a payment 6 figures across the globe. No longer did I have to do a micro transaction where it absorbed my margins. But I had the freedom with the use of virtual currencies to fundamentally change the payment system's paradigm. The advantages as I saw them were simple. 1, transparent and neutral. The information is available in the public block. 2, secure and controlled. The most counterfeit-proof currency in existence today. 3, fewer risk to merchants, lower cost to consumers. Payment freedom. No banking holidays, no borders, no limits. Micropayments. Without the 10 to 40% fees that financially punish the unbanked. But most importantly, a system built on a foundation of security and transparency, because all the information needed resides in the public ledger. As an IT security person, this enhanced security fascinates me. Cryptocurrency is a true innovation. It is a triumph. Through some clever cryptography, a proof of concept scheme, we have a network that we agree on in a common ledger. In March of 2013, cryptocurrency made the mainstream news. We all read the headlines. And in the worst way, cryptocurrencies defined what we now were. However, this news led regulators to some important steps to provide some much-needed clarity around cryptocurrencies. FinCEN ruled that exchangers were transmitters. Luckily for me, I didn't know the complexities, nor the delays, or the regulatory maze I was entering into. While the FinCEN ruling determined that we were a money transmitter, we found challenges through the process of compliance. If I had a magic wand today, and I could contribute to the insights of the last 18 months, based on my experience of obtaining the license at the state level, I would provide the following suggestions to help achieve our common goals of regulatory clarity and consumer protection. I'd ask for state cooperation, information sharing, state working groups to educate one another. I would ask that states help with the cost of doing business, especially if they invite us out to educate them. Instead of stating, you can't do business until you meet every requirement that has yet to be defined, meet the minimum requirements of the box we already fall into, which is money transmission. Give us a probationary license so that we can get that process moving forward and the capacity to do business, prove ourselves to have the capacity to do business within your state. Permissible investments should not be dollar-for-dollar value to every cryptocurrency that we hold. Risk-adverse rules create obstacles, and obstacles can sometimes create unnatural behaviors. Today, there are extremely long wait times in the processing of applications. There are certainly states where we have stalemates. Some applications have been in for over a year, and we're unable to determine the path forward as it's not a clear process. I understand and strongly commit to consumer protection. I commit to the Bank Secrecy Act through the implementation of anti-money laundering programs. I commit to meeting policy goals that have been set forth. I understand that we're dealing with complex issues and that as regulators, you've got to get it right. Along those lines, though, I applaud you. I applaud the approach of the task force, especially Georgia, Massachusetts, and New York. Thank you. You've taken the leadership role in looking at the issues of virtual currency. But I would ask that you not think about this issue only as a risk proposition, but as an opportunity. The innovation that virtual currency holds for issues such as consumer protection and payments is extraordinarily vast. We believe, because of the strong consumer protection laws and the approach here in the U.S., that it is the absolute best place for my business to be located, regardless of the regulatory scheme in place. But realize this is a global marketplace, and companies like mine will exist. The question is, will they exist in the U.S.? My response would be yes. But in order to do that, we need access to regulatory clarity that we seek. Thank you.
Thank you, Ms. Burton. Ms. Tierney?
Thank you. Chairman Cotney and members of the task force, my name is Anne-Marie Tierney, and I'm the General Counsel of Second Market Holdings, Inc., which is a New York City-based company with a couple of different businesses. The first is Second Market, Inc., which is a registered broker-dealer, and it's a platform that enables private companies and investment funds to raise capital and provide liquidity to shareholders. But I'm also the General Counsel of the Bitcoin Investment Trust, a private investment vehicle that enables institutional and accredited investor individuals to invest in Bitcoin. On September 25th, 2013, our subsidiary, Alternative Currency Asset Management, launched the first U.S.-based investment vehicle for investing in Bitcoin, to which our investment manager serves as a sponsor. The BIT, as we call it, is a statutory Delaware grantor trust that passively holds Bitcoins. It has no other operations. Investors acquire shares in the BIT through our broker-dealer, and the BITs, which also acts as the BIT's authorized participant. It's structured very much like an ETF, if you're familiar with that structure, other than the fact it's not publicly traded. We created the BIT to provide investors with a professional solution to gain exposure to Bitcoin in a structure that solved for many of the problems of direct Bitcoin investment, such as having to wire funds to unregulated exchanges in foreign jurisdictions, as well as concerns around Bitcoin safekeeping and ownership. In addition, by transacting through Second Market, our registered broker-dealer, investors gain the protection of regulatory oversight, compliance procedures, and a FINRA-registered trading team. In the 8 months since we launched the BIT, our assets under management have grown to over 105,000 Bitcoins, approximately $46 million at today's price, with over 140 accredited investors. The majority of these investors are entities, including family offices and private trusts, and high net worth individuals willing to invest at least $25,000. It's important to note that the BIT is not currently registered with the Securities and Exchange Commission, and the securities being sold in the BIT are issued pursuant to Rule 506C, a private placement exemption. And as such, that we're only open, as I said, to institutional and suitable accredited investors. So in addition to its activities as sponsor to our Bitcoin Investment Trust, our asset management subsidiary, Second Market, our broker-dealer subsidiary, markets and offers shares in the BIT and facilitates the investor transactions. As a registered broker-dealer, Second Market is responsible for verifying the accredited investor status of every investor, carrying out anti-money laundering processes and procedures, and completing FINRA's required Know Your Customer procedures, including a stringent suitability review. Our suitability process includes having each investor complete a detailed questionnaire specifying the details of their current investment portfolio, past trading history, risk tolerance, and investment intent. We review this information carefully and then reach out to potential investors to verbally confirm that they understand the risk profile of the investment. We have a private placement memorandum that my CEO likes to brag and not brag, has about 30 pages of risk factors, which I think is a good balance between where I wanted to be and where he wanted to be. But it's a very robust document. And because we're generally soliciting for investors under Rule 506C, we also review all of the investors' financial documents to verify that they're actually accredited investors. We're one of the first companies to take advantage of the general solicitation ability after that piece of the Jobs Act became effective in September. Once our broker-dealer completes the processes and determines that an investment in the bid is suitable for the investor, the broker-dealer sources Bitcoin in an amount representing the investment and then delivers the Bitcoin to the trust in exchange for shares that it pushes down to the investor. Second Market holds the Bitcoin through a highly secure process until delivered to our Bitcoin investment trust in exchange for newly issued shares. At no time do BIT's investors have capital exchange for Bitcoin and vice versa. Instead, the investors are indirectly investing in Bitcoin through an equity investment in the BIT based on the NAV per share calculated on a daily basis based on a 24-hour volume-weighted average price that we base on the major U.S. dollar-denominated Bitcoin exchanges. We're an active buyer in the Bitcoin market, sourcing Bitcoin not just for our trust, but for a number of sellers in the market, including merchants that accept Bitcoin as payment, merchant processors, early adopters, and Bitcoin mining companies. In every instant, we require the seller to complete a new account profile for full AML purposes and KYC purposes, including full legal name, address, social security number, employment information, tax IDs, along with a copy of government-issued photo ID. Once we obtain that information, we carry out our standard broker-dealer anti-money laundering processes, including background checks through LexisNexis and Google, as well as an OFAC search. These same procedures also apply to buyers in the market in the event that we're selling on somebody's behalf, as when we have an excess position in Bitcoin or investors choose to redeem their BIT shares in exchange for cash. We'll generally sell Bitcoin through an exchange that's implemented their own AML procedures for exchange participants, and to the extent that we identify a potential buyer in an off-exchange transaction, we run the buyer through the same process that I described for sellers of Bitcoin. As a registered broker-dealer, we're subject to FINRA examination on a 2-year exam cycle. All of our employees that trade in Bitcoin are registered representatives with FINRA and have all their licenses. And in accordance with FINRA rules, we also maintain a system to supervise all of those registered reps. The system is subject to ongoing testing and review, and our anti-money laundering process is audited on an annual basis by an independent firm. In connection with our expansion into Bitcoin trading, we also amended our broker-dealer written supervisory procedures to include Bitcoin trading activities, including procedures for documenting each trade and retaining all related documentation. And we also institute a company-wide insider trading policy, much like we have for the securities that we deal with, which limits our ability of all of our employees for buying or selling more than a certain number of Bitcoin without going through me and our Chief Compliance Officer. I applaud the Conference of State Bank Supervisors for taking a proactive role with respect to virtual currencies and determining what changes, if any, are necessary with respect to the current regulatory scheme. As there remains a high level of uncertainty at the state level regarding the status of virtual currencies from a regulatory perspective, I believe there's a tremendous opportunity for the CSBS to take an approach that provides clarity without being overly burdensome, supporting a growing business segment while also ensuring for adequate consumer protections. Thank you again for the opportunity to speak, and I'd be happy to answer any questions.
Thank you, Ms. Tierney. I'm going to start with Mr. Syracuse from New York.
A question that's open to the whole panel, but perhaps Ms. Tierney would like to start. Should investing in virtual currency like Bitcoin be limited to accredited investors or open to retail investors as well?
In my view, I look at Bitcoin more as a currency than a security, so I don't think it should be limited to accredited investors at all. I think you saw a lot of pushback in the context of the Jobs Act, where a lot of investors were very unhappy that only accredited investors could get into some very interesting investment opportunities. I know that the SEC has been charged with looking at that accredited investor definition this summer. Right now, only 7% of the American population qualifies as an accredited investor, so limiting investment in digital currencies to that limited pool of investors, I think, doesn't seem sensible to me. If they can go and buy a foreign currency on, CoinEx or any other exchange, I don't see why Bitcoin should be treated any differently.
I agree. I think it's just the fact that Bitcoin is in its infancy that was an early, risk-averse step that may change.
Yeah, I echo the same. I believe that once we have an educated customer base and with proper disclosures in place, that it could be adopted by the mainstream as an investment.
Thank you. Commissioner Hagler?
Thank you all for being here, and please know that the time and expense that you bear to be here is not lost on us, and we feel that your presence is of high value. My first question is for Brian. As you know, in Georgia, we were working with the merchant acquirers on the traditional side quite a bit, and learned a lot about what we thought were risk initially that turned out to be maybe in a different ranking than we'd originally thought. Could you speak to us in terms of, to dispel maybe or maybe not the concept that it's the Wild West for nefarious activity in the Bitcoin world, as to terms of, what do you do to eliminate or deny service to merchants that you don't want to do business with? Can you give us some ideas of what those industries are, if not necessarily names of those entities? But then on a more positive side, how does your cost structure compare to traditional merchant acquiring?
Sure. Well, because it is such an early stage, we've been very thoughtful in the types of merchants that we allow on our platform. And online gambling is obviously illegal. We don't allow firearm dealers or any of the medical or recreational marijuana retailers that are in some of the states on our platform. It's way too early for that, and there's plenty of other business, e-commerce business, that if we could just get up 1% of it, we'd be doing very well. So at BitPay, we have this escalating KYC policy, and we partner with a company named CoinPliance to do our merchant onboarding. So they do all of the document verification, the scrubbing of the website of the merchants to ensure, looking for keywords essentially that would violate our terms of use. We do that up front for everybody. We will fact check everybody, and if there are questions that come up from a yellow light or a red light ranking from our partner, we investigate personally. So we try to run as many through as we can in an automated way. It's the only way we can scale. But right now, only about 30 to 40% are getting that minimum $100 a day tier to process. After that, it does take some manual inspection. So we're very diligent. We think that it's very important. As Megan said, compliance is a pillar of our business. It has to be. We wouldn't have investors. We wouldn't have banks. We wouldn't have an auditor if we weren't doing the right things in their view as a merchant acquirer. So to the last point, what was the last point?
That was more of the softball piece. How's the cost structure compare?
Sure. The cost structure is very, very low. I mean, the cost to process a Bitcoin transaction is nominal. And as such, BitPay has employed a SaaS model of pricing approach for merchants. So no longer are you being charged as a merchant with transaction fees. We do have that as a starter plan if you don't know which level you want to fall in for a monthly service, and it is 1% compared to the 2, 3, sometimes even higher percentage that merchants pay on credit cards. So it's quite compelling to a merchant to accept this as a form of payment. And then, depending on the features and benefits and support that's required by the merchant, you can choose a plan, a monthly plan that best suits your needs, and basically process for free after you've met that monthly commitment.
Thank you. Commissioner Breakspear?
Good morning. We obviously are trying to learn about this as part of the CSBS and figure out a standard set of regulations, potentially. And we would I'd be interested, given that We had this instance in March, which is going to end up in the courts before very long. And without a real framework of regulation around virtual currencies, it could be that the courts effectively rule on what the regulations are going to be, and you're going to get stuck with that. Do you have any commentary or concern about being in that position, and how would you view a step going forward?
I'll go. When we were labeled as a money transmitter, CoinEx specifically, I fit into the box 94% if I had to guess. There's an outlying 6%. Things around monetary value and the definition of it, permissible investments and stored value. There's very specific areas within the statutes that make me scratch my head and say, how can we overcome these minor obstacles? With items as they're approaching now, I think if we had had the framework in place back then, these last 6% of remaining items would have already been tackled. They would have already been dealt with, and we would have already been progressed past the point of the discussions that we're sitting here having today. I do think that regulatory compliance is important, and I think it's key for our business specifically, CoinEx. In order to create a consumer protection mechanism, it needs to be there. But we need to work through that last remaining component to solidify it.
I would just suggest that we see the same problem. As I said, my company has two different business lines. One is transactions in private company stock, and one is this Bitcoin business. And we've seen problems in the way that state laws don't work together across common boundaries around securities transactions at the state level. That's caused a lot of issues for businesses who are looking to provide liquidity to their shareholders. I would hate to see the same thing happen around digital currencies, where there's not a common approach, where it's subject to court interpretation or different commissioners taking different positions. I think that's not going to be good for the digital currency market, and it's going to make the U.S. very non-competitive when it comes to other jurisdictions. And I think, as Megan said, I think no one wants to see the digital currency market shift out of the United States because of a regulatory framework that doesn't actually truly support investor protection issues, but is more a reaction that there needs to be rules in place that are not necessarily the right level for the risks involved in the transactions. So I would encourage all of the commissioners and the states to work together to put a common framework in place so that you don't have an issue with the court creating rules in Florida that wouldn't exist in Massachusetts or another state.
Thank you. Commissioner Cooper?
I, too, thank you all for taking the time to be here today and respect that time. Some of the panel members have mentioned that Bitcoin was in its infancy, and then we had comments like you need to follow best practices, so I assume the best practices are in their infancy also. But one of the things, and first I'll direct this to Ms. Burton, in the MSB space, let me back up. We understand innovation, and I think everybody on this this body here feel like that we need to go forward in order for the payment system to go forward. But in the MSB space, we deal with startups all the time, and so I'm having a little bit of trouble trying to determine why you think that the cryptocurrency area should receive special consideration. And then I'm going to follow up with that. I think, why shouldn't the capital requirements, minimum net worth be applied, permissible investments be applied, and bonding requirements, et cetera? So Ms. Burton, would you start with that, please?
Certainly. Mr. Cooper, I think I might have been misunderstood. We have met the MSB requirements in the states in which we've applied. We've put the bonds up, and we've committed to the regulatory framework that exists. However, in many states, Texas is the exception here, in many states, The definition of what we are and what we do has not been aligned with the statutes of that state. They don't know where we fall or how to handle the permissible investment, whether the surety bond will cover the permissible investment. The reason being is it boils down to the definition of monetary value, and if a state has not decided that definition of monetary value, it leaves loopholes and gaps in the market. I'm not saying negate the fact that there is a regulatory framework which we agree and abide by. I'm saying that where those small gaps exist, why not allow us to approach the regulatory framework that exists today, act within that framework, while the state continues to resolve the internal issues of what their definition of monetary value might be.
Okay, and it also seems to me that it would, that response would include while best practices were evolving too.
The best practices that we follow are the traditional markets as they are today.
Okay.
We didn't look at the cryptocurrency space to try to define something. We said, what is the system doing? How can we fit within this system? There's technologies out there that do transaction monitoring for banks. Apply those. There's technologies out there for AML. There's laws that exist. There's rules that apply. We didn't want to reinvent the wheel. We just want to alter it slightly to be able to encompass a new currency pair that didn't exist prior.
Anyone else care to address that?
I would echo what Megan said. I mean, when we say best practices, and we mimic merchant acquirers. Most of them are in Atlanta or in Georgia. And there's a reason why BitPay is in Atlanta. We're following their lead and have implemented the same steps that they do for their merchants to a T. So the policy that we put in place is not in its infancy. We've completely replicated it. We only have 30,000 merchants today, so we need to be able to scale that. But I would say that in the absence of new regulation, we're doing everything that a First Data or a TSYS would be doing.
Yeah, I would echo that as well. Applying the best practices of the existing financial institutions, and then coupling that with some new innovations in transaction monitoring, customer onboarding for CIP and KYC, and tailoring those to the specific nuances within our emergent technology.
Thank you.
Commissioner Gonzalez.
Yes, thank you, Mr. Chairman, and thank this panel as well for being here and sharing your thoughts with us. Before I came to Chicago, I had some good conversations with a couple of folks in the Bitcoin community in Nashville, and we were talking about the philosophy of regulating this space, the balance of innovation and consumer protection, and they freely shared their thoughts with me, and I'd ask you all to do that with us if you'd like to talk about that philosophically. And then specifically, as you talk about that, are there certain technological tools or capabilities that we need to be more mindful of as state regulators as we regulate this technology-driven space? Mr. Crone, I'm going to start with you.
We're big proponents of the technology developing, and alongside of that, the security developing alongside. We, at BitPay, have been very transparent on what we do in our state and at the federal level. As long as security and fraud detection continues to be built at the same rapid pace that the Bitcoin network is evolving, I think that we'll always have the kind of visibility into the public ledger that we need. I think that's about all I can say on that. I'm not technically astute enough to.
Do you have any thoughts for us from a philosophical standpoint on balance of innovation in this space and consumer protection?
Well, since we're not consumer-facing, I probably am not best to answer that question. But to the extent that BitPay is a merchant acquirer, we graciously, Commissioner Hagler has let us come over and talk with him about what we're doing, and we continue to do that with our banking partners and anybody that'll listen, really, the FDIC included.
Thank you.
So, yeah, I'll leave it there.
And there are some unique attributes in Bitcoin, such as the public ledger system, that allow visibility and transparency to not only consumers but regulators. In addition, leveraging things such as technological controls as well as physical controls and safeguarding funds can ensure a deeper level of safety.
I would say that what we're seeing today, it's a revised model of what already exists. When you look at the movement of money, it's actually rather fascinating and complex. If you look at the MoneyGrams and the Western Unions, and you look at how money traverses from one side of the globe to the other, and the steps and the processes it has to go to get to there, that part intrigues me. When I engaged in this space, the fascination for me was a model that took a couple of steps out in the ease and facilitation of a new protocol, a protocol that essentially could replace the framework or the backbone as it exists today. You're probably very familiar, I'm sure, with how a Western Union or a MoneyGram and how the money moves. This is simply a more innovative or newer model on that. It's a way in which we can transact that opens up a level of transparency to everyone. That's the fascinating component of it.
Since we're not a MSB or a money transmitter, I really can't add much to the remarks that the rest of the panel's made.
Thank you.
I would add one other thing just about wallets and consumer wallets and the security that needs to be elevated in those wallet services. A lot of innovation needs to happen there. Simple username and password is not enough security, and to the extent you're providing protection to consumers, having that secure wallet needs to be moved along.
So, and Mr. Crone, you said you're not customer-facing, and I don't know whether any of you would say that you're a customer-facing organization, but at some point, a consumer buys a Bitcoin or sells a Bitcoin. And it could be through, online, their phone, the Bitcoin ATM, whatever that we have in Massachusetts. Other states have they've started popping up. So where does the idea of consumer disclosure enter into this? Because at some point we'll have the opportunity to meet with some consumer groups and get their thoughts. But I'm trying to hear from you first in terms of what does a consumer need to know? I mean, this is not an FDIC insured product. Clearly, this is how much are they paying in either U.S. currency or in virtual currency to be able to make that transaction happen? And how do they? So what do they need to know, and how do they acquire this information? So I'd like to hear from each of you.
This is part of the framework as we have today. For me, it's very simplistic. What does the consumer need to know? They need to know the risk involved, a disclosure statement. They need to know the fee structure, which is produced when you provide the receipt. They need to be educated. How does the system work? How do I transact through it? Know-how from the system itself. I think those, for myself specifically, are very easy to accomplish, because when you read through a state statutes of being an MSB, it clearly tells you must provide these items to the consumer for consumer protection. Each state has a different statute or a level of disclosure that they want to happen. But that was probably one of the most eye-opening aspects for me when I said that I was lucky that I was naive when I fell into this. I sincerely mean that. I truly did not know the maze of complexity that I'd be stumbling through. In hindsight, it's been extraordinarily helpful to be able to speak with the states, to be able to speak with their examiners, to be able to get understanding of Why does this system apply, and how do I extend that out to the consumer-facing end of it? I think that they're there. Obviously, there's varying intricacies among the states, but those three components would be key.
Yeah, I would agree. It's really the point at which, how is the consumer getting Bitcoin? Through an exchange? Then they need to be educated there. I think your website, CSBS website, has a good statement on educating consumers about the risks of virtual currencies. But certainly they're not going to go seek that out. It needs to be at the point they're purchasing Bitcoin or exchanging Bitcoin.
And I do applaud the CSBS for rolling out the recent statement and the states for following suit and issuing their own statements. I believe that through consumer disclosure that a well-informed consumer is an empowered consumer. And through these types of initiatives, both at the purchase points and through overall messaging from individuals such as yourselves, that there will be ensured safety to the ecosystem as a whole.
And I would just echo those thoughts. And also, I think as the market develops more and the pricing transparency becomes more accessible and the volatility declines as deeper pools of Bitcoin are formed, that the volatility become less of an issue. And if you are transacting in Bitcoin and you know what the exchange rate is that the merchant is getting from the processing company, so you understand what your dollar to Bitcoin conversion is US dollars, that'll assist the consumer in understanding, the cost to them of the transaction. And then I think not just CSBS, but also NASA and the SEC and other regulators are doing a really good job about, letting consumers know about the risks inherent in Bitcoin utilization, and that, again, will continue to develop as people become more familiar with Bitcoin. A year ago, I was at a dinner party of 15 people. Not one person besides myself knew what Bitcoin was. Now I'd say 14 of those people are familiar with Bitcoin, and maybe 3 of them own Bitcoin. So it's just an evolving market, and we'll continue to see the developments as merchant uptake continues.
Thank you. Commissioner Leary?
I actually wanted to follow up on that consumer guidance that the task force issued. That was the first thing we focused on and issued. I'd love to hear your views on it, more with respect to, did we get it right? Are there other issues we should have addressed? Are there issues that we didn't address? Or was any of the tenor tone in the statement inappropriate?
I would like to reread it and look at it that, under that, with that. But I think that every point that was made was accurate. So is there things that are there things that are missing? Perhaps. But I'd love to have the opportunity to give feedback.
And I invite all of you to reach out to members of the virtual currency community for crafting those statements. We're happy to help. And overall, I thought it was well crafted. There were the references to malicious behaviors, as there are with traditional payment systems and cash as well.
I would agree. I think I'm glad you're a regulator and I'm not. I realize that at times our actions aren't really realized until they're actually put into play and executed. And I think that time will tell as to whether or not there could have been something additional or something that might have been left out.
I would have no comment on. I thought it was well done.
I would solicit the panel's written comments. We'd love to receive them and be able to consider them here.
Thank you.
Thank you. Secretary Flores.
Thank you, Mr. Chairman. I had a question with regard to, you may have heard the last comment, a question I had for the last group with regard to the difference between compliance and a more prudential regulatory approach. We saw what happened, for instance, in Mt. Gox and what has come out of in terms of what were the risks and what was the ultimate breakdown that led to the theft of the Bitcoin. So my question is, if we were to use, let's say, a more traditional compliance examination approach that you find in most of the money transmitter state laws. Would we capture that? And I asked that question in terms of, do we, as we're moving forward in this space, do we have to reevaluate the way that we examine this space, and in particular Bitcoin, to ensure that the great protections that you're offering consumers are actually manifested in the actual practice of the operations. So I'd like to hear your comments on the prudential versus compliance.
I believe you hit the nail on the head, specifically with Mt. Gox, just to speak from my knowledge of it. The framework was there. The warning was handed out. I think the gap was the enforcement and execution. We all knew when the FinCEN guidance was issued that we fell into this realm of money transmission. At that point, we had to make a decision. Do we proceed forward, knowing that we could potentially be in violation, or do we retreat back and abide by the obligations that are set forth? I had that decision to make, along with many, many others. Some of us chose to make it, some chose not to. Some offshored, some simply ignored. I would say that in that scenario specifically, we're sitting a year later from when the FinCEN guidance was issued. We knew what that guidance was. Had there been the enforcement aspect, I don't think we'd be sitting where we are today.
For us, I mean, we onboard all of our merchants the same way. It is a check-the-box compliance type of scenario. It's after that, when they start doing transactions, that we then take a risk-based approach and look at velocity of transactions, average sales price relative to the industries that they're in, those kinds of things, and flag them for suspicious activity. We've caught some bad actors with those types of risk measures, and we've actually kept merchants from coming on board in some instances as well through the practices that we use. So both the compliance and, I think, the risk-based approach are working well for us.
And I think in front of you, you have some of the best-in-class businesses that have actually actionably implemented these compliance programs. A compliance program is just a stack of papers, essentially, if you're not actionably following up transaction monitoring, customer archetyping, and doing your due diligence at every level.
And I think there's still facts to come out about Mt. Gox. We transacted with them early on when it became clear that they could not get money out of Japan. We knew there was a big problem, and we stopped dealing with them completely. We took them out of our Bitcoin NAV index quite soon after we launched the trust. I don't know whether or not all of the Bitcoin was stolen. We thought it probably felt more like a lack of internal controls. They found passwords that got them access back to 200,000 Bitcoin, I believe. The idea of being able to hack that many Bitcoin out of a cold storage situation doesn't seem like it rings true to a lot of my technology colleagues. So I think there's still a lot to learn there. But I think, as a general matter, they lacked regulation oversight in Japan. All of the people today that you're talking to work for regulated businesses. We are broker-dealers, we're MSBs, we're money transmitters. So we're already subject to examination. Our trust is audited by E&Y, so we wanted to have very robust processes, procedures around Bitcoin storage so that our investors feel comfortable that if they give us their money and they hold something representing Bitcoin, that Bitcoin is safe and will be examined by FINRA and other regulators in the course of the next year. So I think that the processes are already there for you to have those examinations, to make those examinations, and you'll develop new processes and procedures as you see fit. But I don't think Mt. Gox is really representative of how most of the market's operating.
Just want to follow up on Mr. Behrens. You said that the folks at the table are representing basically the best in class, and so my question is, so how do we as regulators need new tools in this space to determine whether or not you or your competitors are in fact acting, best in class, whether you do have the internal controls? In other words, Do we have the tools today to do that, or is there something inherently different that requires us to acquire or develop new tools?
I do think that there are some unique attributes with the ledger system, with the public ledger system, where you can perform audits on solvency within institutions. I also believe that many of our companies have been proactive in asking for guidance from the regulatory bodies and crafting those controls at inception. And that's been a strong suit of our organization, is that partnership and understanding the concerns from the outset and building our processes around that.
I had the luxury of being audited by one of you, and I mean that sincerely, though. It was a very good experience. It was very insightful, and it made us a better organization. There were some gaps. So when you state what can we do to be able to look at that framework, how can we improve upon the rules that are enforced upon us, we had this 5-hour audit, and it wasn't until the 4th hour of it that the last hour was spent specifically going through the general ledger and talking about the gaps. I don't know if other companies are as transparent as we are, but we understand what those gaps are and where the system needs to meet up with them. In doing so, it was a very educational process. I would like to think that in a year from now, we're not educating, but we're in fact looking at the system, monitoring the system, and enforcing the system that already resides. And I would say that last leg of the audit was the one that was probably the one that concerned me the most on my mind, in the fact that I don't have all the answers, the states don't have all the answers, but there's a clear gap between the two of us as to how we overcome the challenge of looking at the public ledger and matching the two up. How do we reconcile something that's not residing in that U.S. bank account? How do we reconcile that trust level of what I'm holding or say I'm holding for my consumer versus what I actually hold? That's just a very simplistic example, but I would say the educational aspect of what we do, maybe educating the states over that hurdle.
One thing that I wanted to talk about today was a bit about, an obstacle that we have in the ecosystem today, and that is, the ability to be banked. It's very difficult for Bitcoin industry companies to get a banking relationship, and only being completely transparent with your compliance officer at the bank, providing, endless data on every one of our merchants, whether they're transacting or not, is the only way this works. And I'm happy to provide that, but at some point, banks are just backing away, saying the cost to do this to them is just too burdensome, and they just will say no. And there's money to be made here for the banks. So I'm not absolutely clear on the level of scrutiny that they're having to go through when they do an audit with the FDIC or the OCC, but I'm being educated by my bank's compliance officer, and we will continue to hand over everything and anything that they need, and it's been educational as well as Megan said, on understanding what is required of them, so that therefore I'm requiring it of our merchants. So only through that kind of two-way feedback is this working, but I think that's a good step that the banks are taking. But I wish there were more accommodating.
I would concur. I had a very insightful meeting, and Kevin was a part of it with the FDIC, and we've actually been turned down by about 61 banks now. That's overwhelming. We never get to the word cryptocurrency. We state the word MSB, and the conversation halts. So I wouldn't say that it's specific to this panel that you see before you today. I think it stems specifically to us being put into a category of high risk. But in this meeting, what was fascinating was the fact that when I talk about the transaction flow that we could potentially have, the sheer volume of what would go through, when you think about how exchanges operate, whether it's the CME, ICE, NYMEX, NADEX, you name it, there is a tremendous amount of volume that surpasses through that exchange the connection of a buyer and a seller. A community bank is typically not equipped to be able to handle that level of transaction volume, nor do they have the insight into my business to know how to gather enough information at the KYC process to know who we're touching and what we're doing. There needs to be a bridge between where we are as an MSB in a high-risk category and where the banks are and how they're being regulated to be able to facilitate better communication between the two.
And I would note that a bank, a large bank that we've had a relationship with for over 8 years, gave us notice yesterday they wanted to end that banking relationship, in part because our transactions around Bitcoin, even though we're not an MSB or an exchange, raised our risk profile to a place where it was too much work for them to figure it out. And that was really, really discouraging.
Yeah, thank you. I'm going to go back to Mr. Syracuse.
A question for Mr. Barron. I'm curious about the storage of Bitcoin and whether or not you see in the future sort of the protocols surrounding storage of Bitcoin and other virtual currencies will become standardized and what that will look like.
Obviously, the ecosystem is evolving. What we've done in our company, Zappo, is we've created physical layers of security, technological layers of security and segregation, as well as basing our vaults in jurisdictions around the globe, that we have a certain amount of comfort with their policies. The storage and security is ultimately going to be the hindrance or what's going to thrust our industry forward. Having a safe form of retaining and storing that value, just like any traditional financial institution, is paramount to their success. We added an additional layer, which is ensuring the deposits in Bitcoin-denominated, insurance, so our deposits actually are able to scale along with the, price fluctuations as well. I think there are unique attributes with things such as multi-signature technology, which many of you are probably familiar with. And by leveraging these technologies, we can create a greater comfort for the consumer and ultimately affect better consumer protection.
I was going to echo the multi-sig. I think that's going to be a big development in securing Bitcoin. Are you familiar with the concept? Mm-hmm. Okay. Also the addition of escrow services for some types of transactions is something else that could be done over the Bitcoin network.
Commissioner Hagler?
Thank you. Brian, you asked the last question I had geared up already regarding the challenges that MSBs have with finding banking services. As kind of a tag along to that question, have any of you explored or worked with banks in terms of becoming just an outright partner with them as they, or have they expressed an interest in doing something in the virtual currency space?
Yeah, I mean, it is absolutely a partnership. It wouldn't work any other way. So we would help if they wanted offset some of that cost if we needed to help them, add another compliance person or whatever the cost that they're incurring. I know that they are. Our bank is doing an OFAC check as we are when we onboard them, but they're also doing a bit of website scrubbing and digging their own on some of the merchants that are doing some of the more larger transactions. I mean, it's unfortunate that there's no exchange here in the U.S. and that's up and running, and there's a reason for that. And we've got to remove those obstacles, or they're going to go offshore. And I think that in the U.S. we want that governance to remain here in the States. So we can figure it out.
And we've been very successful coming from a compliance background and being in the ACAMS community. Many of the compliance officers at partnered banks, we've had an ongoing dialogue and really reaching out and educating them on how to mitigate the risks in regards to AML and fraud. And I feel through continued work in the compliance community that we can come to an understanding about the unique attributes, the unique risks, and their unique advantages with our technology.
I believe I heard the question a little differently. Correct me if I'm wrong. I heard, do banks want to partner with us to extend perhaps that innovation to their clients?
Yes.
So my response would be yes. There have been 2 banks in particular. There was one in New York, and there's one in Georgia. And once we did a demo of the system and of the platform and the exchange in particular, they were fascinated as to how can we extend this to our consumers? What can we do to extend this attribute out to the public? They actually explored it, and I think they did a good job of exploring it. But I think ultimately, this was in September of last year. They came up against a roadblock that, because of the risk profile, it would put additional scrutiny that they would not be able to handle within their organization to be able to proceed forward.
As a broker-dealer, we're not looking to partner with other
And I
banks.
apologize for not asking better questions.
That's
for you
okay.
at the table.
Commissioner Breakspear, do you have another question?
I have a slight. You talked about being a broker-dealer and obviously having investors, and yet the other 3 members of the panel are more focused as money transmitters, which leads to the question if you obviously think this is some form of security you're dealing with, and the others think that it's some form of money. Would you like to elucidate on that?
If I gave you that impression, that's not at all what I was trying to say. We have a broker-dealer subsidiary, and we have an asset management subsidiary that created an investment vehicle that's issuing shares. Those shares are 100% a security, but they're investing in Bitcoin. So it's almost like a gold ETF or a commodity ETF. The investors do not actually get access to Bitcoin. They only get access to shares. So it's 100% a security, 100% being sold pursuant to an SEC exemption from registration, 506C. And our broker-dealer is acting as a market maker, trying to find people who are willing to invest in that security offering. But that's, I believe, as I said to Dana, in my mind, there's no indicia of Bitcoin that should make it be deemed to be a security. I know that there's been some analysis, I believe, in Texas. The court there in a Ponzi scheme situation, a decision was made that Bitcoin is not a security. And I think where people get caught up and where some confusion happens is you do have a population of people who are investing in Bitcoin as an asset investment opportunity, the way they might buy gold or they may buy another foreign currency. So it has investment aspects, but it is definitely not a security in my mind.
I should have been clearer. It's an investment in something, and if it's gold to me is a commodity, it is not a security. And I think the implication is what you're saying is it's an investment in a commodity.
I think I said earlier, I believe that I think that Bitcoin should be treated like a currency. There are definitely currency ETFs. There are definitely mixed currency ETFs. I think in my mind it has all the indicia of a currency, not a commodity. It's not a derivative. There's no derivatives existing on Bitcoin right now. Should that happen, then yes, those would be derivatives. But right now, in my mind, Bitcoin is a currency type, a virtual currency. That's exactly why it's called cryptocurrency, because it acts just like a currency, not as a commodity and definitely not like a security.
And I'm not trying to challenge you totally, but thank you for the
do it
clarification. But does it not act more like a commodity in terms of its level of volatility than a currency?
I believe the reason for the volatility is exactly what we've been talking about, the lack of a deep pool exchange in the United States. Once that happens and volatility becomes more limited, then I think it will look more like a typical foreign currency. And if you look at jurisdictions around the world, I think this is something we have to be very mindful of. Most foreign jurisdictions are coming out with a decision that they're going to treat cryptocurrencies as a foreign currency or some type of a currency. To my knowledge, not one other jurisdiction has made a determination that Bitcoin is a security or a commodity. I know many jurisdictions are still making that analysis, but I think we have to be very careful to be mindful of how Bitcoin's being treated around the world for exactly what we've been saying. If the U.S. regulatory scheme around Bitcoin becomes significantly different than other jurisdictions, there's a real risk that the business will shift offshore because it's an international digital currency. It's not a U.S.-based digital currency.
Commissioner Breakspear, I'd also add that, absent of options and derivatives, we're going to see that volatility, but once those come into play and we are able to hedge downside risk, the market will level out.
Commissioner Gonzalez.
Thank you, Mr. Chairman. Financial institutions certainly are economic engines for all of our states. Look down the road, if virtual currencies become of widespread use, then what do you see as far as market efficiencies coming out of that?
The concept of real-time payments is very compelling. You're able to send money to your manufacturer in China instantaneously, and that your product is now shipping immediately, I think is very valuable. It's never been duplicated before, and in this Bitcoin ecosystem, it's possible now at almost no cost. At BitPay, we're obviously a merchant acquirer, but we're looking to extend that to up the supply chain to our merchants' supply chain and get them on board so that they're conducting payments to their suppliers in a seamless, instant manner.
And the unique attributes of the technology, having a decentralized system that doesn't rely on a central intermediary to ensure that the transaction has occurred. It's one of the unique attributes of Bitcoin that, without having any need for a financial institution to vet the onboarding process of the party and solving other issues such as the double spend, ensuring that the transaction has occurred, it's gone from one party to the other, and that no other party has received or sent those funds.
I think I alluded to the benefits of the market efficiencies in my opening remarks, but the speed of the transaction, the transparency of the transaction, the security, one of my favorites. And then the ability to change the dynamic of what it does for micropayments more significantly and those who are underbanked. If you look at the fee structures of the traditional models that are out there today, it's enormous. That one attribute of the fee schedule itself, being able to change that dynamic to not necessarily reward, but give them a level playing field rather than punishing them, is pretty phenomenal.
I would just agree. I think all the points that are really relevant and important have been made, but you do see phenomenal opportunity for immediate payment, low-cost payment. And if you think about it outside of the United States, again, this is an international concept, not a U.S. concept. How much money will be in the hands of consumers if you're not having to go through Western Union and pay 9%, 10% of what you're sending home? And instead, you're getting 99% of what you're getting home. There's a lot more money that goes into the hands of consumers in a secure, immediate, and I think, pretty regulated way.
Thank you.
Commissioner Leary?
I have no further questions.
Thank you. Commissioner Cooper? Well, I want to thank each of you for your comments. This has been insightful, I think, for all of us. We gave the opportunity for anyone who did not have an opportunity to present today, if they wanted to sort of take part in an open mic. Nobody signed up, but if there is anyone here who would like to have their say, you are welcome. We'd love to take and in doing so, I ask one thing first, or a couple things. If we could have your name, your affiliation, and if you could just limit your comments to a couple of minutes, we'd appreciate that. And we've got a microphone right here, and we're going to bring a microphone right up front here. So just come right up to the mic, and please, as I said, give us your name and affiliation.
Steve Sunderland. I'm with QuickCoin, a virtual currency business in New York. We are not operating. We shut down in March of 2013 until we get some more regulatory clarity. I have a lot of points here, so I'm going to try to pick just one. First of all, the guidance was excellent. A fool and his money is soon parted, and you can give them all the advice that you want. And unfortunately, there seems to be I don't want to say a lot of fools in Bitcoin, but some people knew the writing was on the wall that Mt. Gox was going to go under. Somebody asked a question about whether you could figure out if they were solvent. Absolutely. At one point, you could pass money between addresses. You could sign a signature, cryptographic signature, with the address containing that money. So somebody, if there was some regulation, could have been in place to prove that those funds existed. And I think the bottom line is just the consequences. We are only now seeing consequences of this action. For the past 4 years, there was a lot of nefarious activity going on because there were no consequences. And I think now that we've reached this point where we're getting this and the panel, and I think I want to thank you guys for bringing this. So that was it. Thank you. Thank you, though. This is it's very important. This is a moment in time where we are seeing payments transition greatly, and I just think this is a great opportunity to move forward with some great regulation. Thank you.
Thank you.
Thank you very much. Does anyone else have any comments that they'd like to add? Okay, so I want to, again, thank this panel, thank all the other panels that we had today. This was the first hearing of the CSBS Emerging Payments Task Force. We will be scheduling future hearings to hear different perspectives on payments issues and payments trends, and we will be having deliverables over the course of the year. So we thank you for your input and look forward to working with you in the future. Thank you.